Rebecca, jump in here because the spike in interest rates also goes back to bad policy. I'm sure you saw the Journal story. Americans finally starting to feel the sting from the Fed's rate hikes, 11 rate hikes. We're talking about 7% plus mortgage rates and higher rates overall, expected to cut into growth. Rebecca, jump in.
You know, Maria, it really concerns me when the Fed held rates last week, but they updated their economic quarterly projections. And it's still very hawkish. So we're looking and expecting them to potentially even raise. We obviously have had Fed members say that there's still potentially going to be a raise looking at the dot plot. So while oil is tightening, we know Saudi Prince MBS wants it at $100 a barrel for his economic policies and what he wants to implement. But this is recessionary times. Germany has been in a depression really for the last 6 months in their manufacturing. That's affecting the Eurozone. It's affecting Asia. And it is coming here. So we cannot be, sort of out of touch with what's really happening, no matter what people are saying. People are feeling it in their pocketbooks, especially, Maria, when the student loans restart next month.
Yeah, for sure. And I guess final question for you, Mark, is what does this all mean for earnings? Because after we get through this week and a potential government shutdown, we'll be focused on third quarter earnings, which will begin in about 2 weeks with the quarter ending on the 30th. Is this inflation and slower growth story going to cut into profits for the third quarter?
Well, it will, and it's going to vary industry by industry, of course. Oil prices are going to hurt transportation earnings, and you can hedge for a certain period of time, but after that, it's difficult. Higher wages are going to hurt across the board. Look, it's not just a handful of unions that are getting 8, 9, 10% raises. It's other non-organized groups and companies that want to head off unionization that are paying. And there's an inverse relationship between wages and stock prices. So that's going to hurt. And higher interest rates are going to hurt corporate bottom lines. Any company going to the debt market now is going to pay exponentially higher than it did just a few months ago, and certainly a year ago or longer. So those are three headwinds against profits. Profits are the number one driver of stock prices. So we need to keep our eye on the ball in terms of what's going to affect the investor results. And we think earnings are always the biggest driver. And right now, those three factors are working against them.
All right. We will be watching the quarterly numbers and, of course, the beginning of the fourth quarter next week. Mark, thank you. Mark Avallone joining us this morning